Hello, friends. Welcome to Akulmach Live. Maintaining profitability is one of the most difficult thing for any business. You are doing business, you are doing a lot of production, you are doing a lot of sales, you are hiring people. You sometimes get this, some sort of post on LinkedIn that so and so is required. So you're constantly hiring, constantly trying to sell, but your business will continue to go down if you do not manage profitability. So in today's program, we will talk about 5 critical points which will help you maintain the health of your company, health of your group by maintaining profit margins. And it is very, very important, as you know that. So let's proceed to the first point, that is about the pricing itself. So while doing business, you focus on pricing, but the pricing is primarily driven by the market forces. So you will tend to reduce the pricing based on various customer interactions that you have. However, there are different methods of doing pricing. One method is basically having your own cost plus pricing. So you actually calculate how much is your cost, and then you add your margin on top of it, and that becomes your profit margin. And then you don't bother about whether you're making money or not. You're still maintaining margin. So you will actually have that method. Other method would be value-based pricing. That means if somebody perceive your services or product as value, then you tend to charge more from that customer. So there could be value-based pricing. Third could be the competitive pricing. There are other methods also, but there are several methods which help you do pricing properly. Because if you don't do pricing, if you don't have a proper rate list, rate card, then you will not know how much money you are making, because there has to be a fixed rate card. And typically the way it is done is that the rate cards are published by the top management in any company. Like in this case, you are the CEO of the company, so it is your job to basically create a baseline pricing based on the cost structure that you have, because in your organization people will not know what is the cost that you are incurring, which includes rentals, includes some sort of running costs, salaries, transportation, communication, all those kinds of costs which you want to include that as part of your cost. You should also include taxation as cost, because tax anyway has to be paid, whether it is the some sort of a sale tax or GST in some countries, income tax, all of that must be part of your costing structure. So now employees in your company may not know what is the cost that company is incurring, and therefore you have to make a plan when you come out with the pricing. Because if you have the first methodology, which is cost plus margin, then your cost may be higher than the market cost. But smart business people basically make a very steep targets. They will say, okay, this is my cost, but if I actually sell more, that means I have a volume sale, then my cost will be slightly lower, and therefore I can give advantage to the customer. So basically you set up an annual target, and based on that work backwards. You have a cost which is fixed. Cost is not going to come down unless you actually reduce the salaries, negotiate with your vendors, negotiate with your service providers about various costs. So you can still reduce it. However, the costs are almost fixed. They will not go down more than 5 to 6%. And then you can actually give a baseline. Now suppose as a businessman you say that, okay, my margin should be 20%, but overall I would like to have 1000 deals this year. So your overall margin may be more than twice. So basically you have to do this math and generate a rate card, a baseline rate card, and then you have to tell your team, the sales people or marketing team, to apply their own margins on top of that. And how much they can apply, you should also give it to them, because there is a negotiation, and since you are giving a baseline, that means you cannot sustain business below that margin. So you give a baseline, and then you allow different sales people and marketing people to add their margins based on value that they drive with each customer. So if you do that exercise, then you can tend to generate good profit margin based on your business system. Now let's look at the second point. That is about the cost reduction. I already told you that your costs are sort of fixed, but then you can find more ways to efficiently reduce cost. Now automation could be one method. How do you basically provide services? How do you collect the raw material? What are the leakages? Can you hire less number of people? Can you automate and get rid of your fat in the organization so that your cost reduces? If the cost reduces and you don't reduce the market price, then your margins automatically increase. So it's an endeavor as a CEO to continue to look at your cost structure, because if you don't look at the cost structure regularly, almost on daily basis, then you will not know how much you're incurring, and your endeavor should be to continue to reduce your cost. Keep ensuring that the production methodology or software development methodology, or how do you provide services, so product development, manufacturing, all that, how efficiently you can manage it so that your costs come down. So that is a never ending endeavor to reduce costs for all businesses. So make sure that you have an very close eye on the cost structure. Third point is the sales optimization. So the cost of sale is nearly, for an average organization, for a startup or for an average organization, should be 15% of your turnover. So in case you say that my target is say for example $100,000 for the first year, then automatically as part of your budget 15% is your sales cost. That means the salary, marketing cost, transportation, communication, printing, talking to people, and in case there are no achievement of targets, so that's extra burden on your pipeline. Therefore all of that should be 15% for an average organization. If you are an average startup, not very ambitious. However, if you are an established brand, then the marketing cost can go as high as 65 to 70% of your turnover, because the brands are fully established and their whole endeavor is to make sure that their brand remains at a very high level in the market, and therefore that brand value itself drives the volume. So they are not too concerned about things like whether I'm going to sell. They actually actively invest in the marketing and sales activity. However, if you're an average organization, your appetite is quite low in terms of how much you can spend in sales activity. Therefore you cannot hire a very smart sales guy, for example, who has ton of contacts in the market. You cannot spend in good printing facility, because the good printing will cost you a lot. You cannot do a lot of SEO, search engine optimization, because SEO is an expensive entity, and therefore you will it's a known entity, but it is quite expensive. It can be very expensive. You cannot invest in buying keywords, too many keywords. You have to have a balance, because you're an average organization and your expenditure on sales activity cannot exceed 15 to 20%. So you have to ensure that you have optimized sales function. And one of the methods of optimizing sales function, sales and marketing, is to automate. There are a lot of softwares available which will automate your marketing. There are a lot of softwares which will actually start handling the client without any human being. So if you are able to implement those strategies, ERP or CRM strategies for your company, then you will not have to hire too many people to manage these things. But because it's your business is running, the sales and marketing is running in a self-propelling manner, and that will actually reduce your cost. Because if you have employees in the organization, that means they will actually ask for salary every month. However, if you have invested in a system, you pay only once, and after that system will start paying back for its cost. So this is something which you need to optimize, sales and marketing function, which is very, very important. Let's move on to the fourth point. Now, in certain cases, the inventory management is very, very important, because if inventory is lying in your inventory warehouse, then it is not generating revenue. So one side, your production is going on full speed. The produced items are not going to the market effectively, so they will be lying in the warehouse. So there is an inventory cost which is getting added to your organization. So that is why, sometimes business actually look at the production and inventory in a very balanced view. How much they can produce per day, per month, per week, and how much they can store, because storing or creating an inventory requires space. Now, if it is a physical product, it will require a real estate. If it is a soft product, a digital product, it will require a hard disk space. So in any case, inventory, if it is lying and not sold, will generate losses for you, whether it is a digital product or it's a physical product, in both the cases, because if they are not being sold, that means the revenue is also not coming. So one side you have an inventory cost, and the other side the revenue start building up, the pressure on the revenue start building up, because the cash flow will start getting hit. So one of the biggest reason for cash flow, negative cash flow, is the inventory management. So please look at inventory and production balance, and this is going to create a lot of profits for you. If you're able to efficiently manage your inventory, efficiently link your inventory with the very highly skilled sales engine, then your cash flow will continue. And these are the items, inventory, your sales, cost reduction. These are the items which, as a CEO, you must look at it on daily basis, maybe hourly. There are dashboards which you must generate in your organization to keep giving you minute by minute account of how much inventory is lying, how much sales is happening, and how much cost reduction you can do. So these are the mantra for generating good profit margin for your organization. Remember, the customer will not like to pay more. So there are, as it is, market pressures. So you have to look internally to increase or maintain your profit margin. Let's look at the last point in this regard. And that is about understanding the financial statements. Many people who are technical in their outlook, they think, why should I look at financial statements? They have this understanding that, look, I am a very good technical person, and therefore I can hire somebody. I can hire the smartest of the CFOs who will actually look for me and tell me what is to be done. I don't have to look at the financial statement myself, because I have hired a person and he is going to pay back by providing me information. Now, this is something which is very wrong. As a CEO, as a leader, you must have the skills of looking at the financial statement very, very closely and also understanding it. There are so many factors involved in creating your balance sheet, in your financial statements, and then by looking at the financial statement, you will know exactly where the money is going, how money is being spent, where are the leaks, how you can plug those leaks. And because any business is end of the day is a commercial organization, so you cannot stay aloof from being commercial in nature. You have to look at the money, how money is being generated, because if you don't look at it, your business is going to fold. So this is the capitalist view, and this is a capitalist world. You are running a commercial organization, you are in business because you want to make money for yourself and for your employee. Therefore, understanding the financial statement is one of the most critical items that you must inculcate. So if you are able to do these 5 things, friends, then you will be able to look at your profit margins and growth for your organization. Hopefully, these 5 points that I discussed with you are of some value to you. Just in case, if you have any questions, please feel free to send in your comments, your questions, and I will be more than happy to respond to those in my next live stream. Thanks for watching. See you in the next one.